The International Finance Corporation is a private sector arm of the World Bank Group, supporting financial institutions and all kinds of businesses. I have the senior country manager for Ghana, Guinea, Togo, Benin. He would be helping me delve into a number of issues confronting the private sector, businesses in the country. He's in the person of Carl Kelhofer. So I just want to look at the role IFC is playing in a time where assessing credit in our part of the world is very, very critical. What is the role is IFC playing this time?
Well, we're trying to keep the engine of the economy moving forward. Here in Ghana, actually, you have many facets of the economy that are still working quite well. The export, manufacturing, agriculture, etc. And so we're keen on supporting these sectors in this current environment to help continue job creation and poverty alleviation.
Now, let's also look at this. There are a lot of concern with respect to small businesses in our part of the world. Financing, even when it comes to advisory services, some of these small businesses are saying it's quite hard to come by one. I don't know, how is the monitoring like from your end, the institutions you invest into?
It's not like that just in Ghana. It's like that in every market that we exist in. That small and medium-sized enterprises sometimes do find it more difficult to access to finance, to access services, to access partners, to access markets. And so we're keen on working with them to help get better at those attributes, but at the same time to do top-down, to help some local aggregators, whether they're financial institutions or agricultural processors or manufacturers that will have linkages to these SMEs, help them develop and flourish here too, to help enable those small and medium enterprises connect to those larger aggregators.
Now, let's move a bit to the IMF program for Ghana. We understand your sister group, that is the World Bank Group, is in a way part of this whole program. I just want to know, is IFC playing any role in this? And if yes, what is it?
Look, the IMF and the World Bank operate separately from us on this. That's a sovereign discussion. We are keen working with what's out there currently, and hopefully going forward if and when an IMF agreement comes into place. So we are active here in Ghana. In fact, we've been adding staff over the last year. We've been trying to do more projects, but in sectors that are actually improving to be resilient or even flourishing in this current global economy. For instance, things like manufacturing, agriculture, things like the DTRT factory that we're going to see shortly, where we're creating thousands of jobs that didn't exist 2-3 years ago. And remember, if you create 5,000 jobs in a manufacturing enterprise, that's like creating 500 SMEs with stable, safe, reliable, foreign currency earning employment for Ghana.
Talking about DTRT, I've been quite following what's happening there. But some are saying, yes, it appears we do more of the exportation than keeping some of the staff in Ghana. Are there plans to also have some in Ghana?
More DTRTs?
Yeah.
Well, we're very keen on trying to do more DTRTs. Personally, I lived here and I worked here 15 years ago, 2006, 2010. And we were trying to support DTRTs back then, the apparel market. But quite frankly, you needed a critical confluence of global competitiveness, reliable power, good infrastructure like seaports, market access, things like AGOA and good trade routes, and competitive workforce and stability. Other markets historically 20, 30, 40 years ago, like Vietnam, like China, like Cambodia, had these attributes. So we, IFC, we've been active in these markets around the world, like Vietnam, like Cambodia, and like Bangladesh, in this apparel sector. But today we're seeing these existing markets in Asia, they're actually getting too crowded, and then there's more need than there are jobs available. And we're seeing the infrastructure here in Ghana is actually better than it was 10, 15, 20 years ago with regards to a very efficient deep sea port in Tema, reliable power, water, competitive labor force, history of political stability and safety, market access through AGOA, proximity to supply chain that we learned ever important during COVID. And so now there's a unique opportunity that didn't exist 15, 20 years ago for the DTRTs to bring more and better jobs to Ghana.
Now, what is the missing link? Why are we still finding ourselves in this situation? Not just Ghana, though, but what is the missing link?
Well, I think the missing link is just the more effort, the more the result. The reality is many of these SMEs actually do have grown from SMEs to medium and large-scale entities and local corporates here in Ghana that didn't exist 10, 15 years ago. But there will always be a growing need for SME finance, and it will never end.
let's talk about the African Continental Free Trade Area. There are a lot of small businesses also going into that space. They're trying to create that avenue for a lot of businesses. But yet, these businesses are saying there are a lot of issues that may hinder their, they partaking in the African Continental Free Trade Area. Is there a role IFC is playing in this particular one?
Specifically with the Africa free trade, continental free trade, not specifically, okay? That said, it's creating market opportunities. And I'll give you a classic example. You take something like cotton that's coming up from Burkina Faso or up in the Sahel. If it can come down to Ghana easier and to be processed into textiles easier and to make the textile and the apparel factory that much more competitive, that's a win-win for both Burkina Faso and Ghana and the entire continent. So this is where facilitating ease of cross-border goods and services and values is going to be win-win for the export for the entire continent.
But how do we sustain this?
Let's get the free trade agreement in place and let's get these businesses developed.
And that alone would make the African Continental Free Trade Area work?
It'll make it work better, yes.
Fine, we have that, but it appears still there are a lot of challenges. You happen to find yourself in Europe. I know one way or the other you guys are engaged in intertrade activities and all that. Africa is still a problem here. What should be done to help such a situation in our part of the world?
Personally, I think these things usually get momentum when they're champions. And so when there's a champion sector, such as the apparel sector, or maybe it's a fruit sector or a fruit processing sector that's showing to both governments and both sides of the border that this is a success, then these things tend to work more efficiently. But I think that the market itself will see these opportunities and take advantage of them to the benefit of people in both countries.
What is the monitoring like after investing in some of the businesses? What is the monitoring like? Because we know in Ghana, when it comes to monitoring, it becomes a problem for some companies. And not just in Ghana, in other parts of the world as well. How do you go about your monitoring? I invest into this particular company with $2 billion. I have certain procedures I follow to ensure that this money is being used judiciously. What is the monitoring like?
That's one of our biggest value adds, I think, is where once you receive an IFC financing, then you're a partner. Okay, and so it's not just monitoring, but it's actually relationship building, trying to add value, trying to expand market access, trying to improve your comparative advantage, whether it's gender, E&S practices, greening, blue, but just trying to improve the whole safeguards to make these enterprises not only more bankable and more creditworthy, but more partnerable for other companies to work with them. Also, usually once we invest, once it's successful, they're usually follow-on investments of large or big or referrals to other DFIs. And so I think the actual first investment is just start of a journey together.
You've had experience in Vietnam, Bangladesh, and all that with respect to various manufacturing. I just want to know, how can we learn something from it as a country, Ghana?
Absolutely, absolutely. I spent the last 11 years managing IFC's operations, first in Bangladesh for 4 years, and then Vietnam, Cambodia, Laos for 7 years. And so I was delighted to come back. But the experience in those countries was profound, to see how manufacturing and manufacturing-led exports has provided stability to the economy, growth to the economy, more and better jobs, particularly better jobs for women. Okay, and large scale of exports. So, for instance, like in Bangladesh, 95% of the exports are apparel. Okay, and yet you've seen the GDP per capita grown to where it's now higher than India. Okay, and same thing in Vietnam, where they've grown up the value chain of export-led manufacturing growth. And just created more and better jobs. In Bangladesh, they started out, some Koreans came and established a few companies, and for the first 10, 15 years, it was primarily Korean companies. But then the Bangladesh companies learned how to do this. They were supplying, and then they eventually started their own manufacturing companies. Currently in Vietnam, I would say 95% of the companies are still foreign-owned, for instance. But the jobs, and the better jobs, are for the Vietnamese.
What can we do as a country, basically? Because it's a conversation that we keep having every day, but yet it appears we're still where we are. What can we learn from this as a country?
I actually think, and I compare to when I lived here 10 and 15 years ago, Ghana actually is in a position now to replicate some of these successes in East Asia, because you do have a track record of stability, that it is a safe and stable environment, that there is reliable power supply, there is reliable water, there are efficient, world-class ports here. There is proximity to markets, to Europe, the U.S. There are things like AGOA. There's a very well-trained workforce, but also now is very competitively priced compared to wage differentials in Asia. So there's a business case that maybe didn't exist 10, 15 years ago that does exist. And sadly, there is unfortunately some devaluations taking place, but every time there's devaluation, these industries are that much more competitive.
So we can say we are now on track?
I think we're on track, and we're seeing more start up. We have GTRTs coming, we have tile manufacturers, we have some furniture manufacturers. So we're seeing these starting to take place. And let's see how it transpires over the coming years. They're starting off well. They're meeting efficiency measures on that can be compared to Asia. They're having brand access to these markets. They're training up these workforce, primarily women, providing a safe, stable working environment. So let's see. But I think we're on track.
How is the manufacturing investment in this part of our world like?
Historically, it hasn't been as big, as compared to Asia, okay? That it's been much more primary commodity, services, and agriculture. But I do think there is this opportunity, and we're seeing more interest from international players, whether it's from South Asia, whether it's from East Asia, whether it's from Latin America, to think about building facilities here.
Within the last few months, we've seen a lot of problems with respect to our economy as a country. We've seen at a point the CD depreciate. We've also seen fuel prices on the hike and all that. When it comes to investors, we know offshore investors at a point were trying to assess the trends in Ghana. You're more or less one of these investors trying to support businesses. From your point of view, what are some of the things still pushing some of these investors to still want to invest in Ghana?
Look, if you're a manufacturer and you're servicing external markets, you're more concerned about the economic climate in the U.S. and Europe and China. That's where historically, when there has been a financial crisis in the world, that the Bangladeshis and the Vietnams tend to do fairly fine because they're all export-driven, export market. And so there might be some turbulence in the domestic market, but people can still come to work. The power's still working. It's still a safe environment. And so they can build, they can work, and they can export products overseas. And so we're actually seeing investors in these export sectors perfectly fine coming to Ghana today and building more factories and investing more in Ghana and creating more and better jobs.
We've just experienced so far. What sector would you want to say, okay, let's start from this particular sector? It's going to work for us as a country. Are we looking at commerce? Are we looking at agriculture? What sector would it be okay for us as a country?
That's a good question. And from that aspect, we think more in terms of we're just willing to listen to who wants to build a business that competes internationally, whether it's tiles for kitchen, whether it's steelware, whether it's laundry detergent, whether it's clothes, okay? I don't know, but we've been supporting across a whole range of these. And I think it's better just to make sure you have a reliable port, reliable power supply, special economic zones so people can find a place to build a factory and not be worried about land rights and land access, and build that enabling environment so we're not picking winning industries, but we're letting winning industries want to come here.
Grateful to have you, Carl Kelfer. So this is the Senior Country Manager for the International Finance Corporation. That is, he's in charge of Ghana, Togo, Benin, as well as Guinea. We've been deliberating on issues with respect to the business sector, manufacturing sector as well. How, as a country, we can leverage on various opportunities being presented to us to, sort of expand our market and economy. My name is James Ishen.